Dom de Marco, Dom de Marco.
All right, we in the building. Y'all know who it is. Mark Fuller Team Alliance, live market observation, volume number 112. Ain't done one of these in a minute. Yeah. We back in the building. All right. Somebody messaged me, what's today, Monday? This might have been Thursday or Wednesday of last week. And it's always funny to me when people ask me if I'm still trading. Please, y'all gotta stop asking me that. Don't ask me that no more. I will never stop trading. Just because you don't see me doing a live stream, you know, or you don't see me doing a market observation, it's still going down. Still happening, man. So we're going to do some market observation. I see some comments here. Let me go through the comments real quick. I'll address these and then we'll get into the observation for this evening. And yes, the SEC case is over. Richard Hart has emerged victorious once again. It's really over for the second time because they had already dismissed the SEC's case. And then the case was extended and they had time to gather and whatever information to try to reactivate the case. They didn't do it. So now it's officially over. My favorite core coin is PulseX. I will always be buying PulseX. As a matter of fact, I had posted in my group chat. Was that today? It might have been earlier today. My thoughts, my opinion. Of course, I'm not offering advice. I'm not advising anyone to do anything. But in my opinion, I feel that if you own around 333 million or so PulseX, roughly 100x from where price is currently, would be worth over $1 million. And 100x is not something that is uncommon in the crypto space. So you have to realize that crypto moves very quickly once it begins to move. As a whole, overall, crypto has not really done much yet. The cycle that we're in currently is the beginning of the bull cycle. And the first coin that will do anything is going to be Bitcoin, of course. So you've been seeing Bitcoin move higher. It has moved over 100,000 already, and then it pulled back. So I think now it's in the wait. No, did it move up again? Yeah, Bitcoin moved up again. Actually, it was in the 70s, but I think it went back up to 90 something thousand, if I'm not mistaken. I haven't even been watching. Damn, shame on me. Well, not really. I don't really. I honestly don't really watch prices, to be honest. I don't keep, I'm not looking at the charts every day for crypto. I just don't. The only time I look at the chart is when I'm buying something. So if I'm buying some PulseX or, whatever it is that I'm getting at the time, that's the time that I look at the chart. But I think Bitcoin is over 90,000 again. Let me see if I can pull it up real quick. What's the price of Bitcoin? Price of Bitcoin. Oh shit! I didn't even realize it's back up to 94,000. It's back almost up to 95,000. That's crazy. I didn't even realize it. So it must have did that just like over the course of the last month or so. Let me see something. Yeah, April 9th. No, not even. On April 7th, the price was 77,000. It's already back up to 95,000. And that's within the course of 18 days? So this is what I mean. This is what I'm talking about. Now, mind you, this is Bitcoin. So this is going to be the slow. I can't say the slowest moving coin, but the percentage of increase is going to be the least because the price is so high. The higher that this price gets, the less percentage you're seeing as far as return. So in other words, right now, Bitcoin is 95,000. So in order for it to do a 2X, it would have to go to close to 200,000, like 190,000. Y'all understand what I'm saying? In order for Bitcoin to do a 2X from where it is right now, it has to go to 190,000. But if you look at something like a PulseX or even the PulseChain coin or even Hex, you look at any of those, they'll do a 2X today. They can do a 2X today. So the lower the prices are, the more, I should say, the easier it is for the X's to come. This is why in the crypto space, the DeFi section of crypto is so powerful, because in the DeFi space, you'll see these returns and it's decentralized. So this means that you're in complete control of your wallet. You're in complete control of the coins that you're holding. Your coins are not sitting on Coinbase or sitting in Kraken or sitting on, Cash App. And even if you own Bitcoin, don't hold it on those exchanges. You should be shifting your Bitcoin assets to a decentralized wallet, period. So, and yeah, this is the perfect description of Bitcoin. It's a heavy coin. Exactly. All right. So, yeah, so that's the whole thing with, I don't even know how I started talking about Bitcoin. But yeah, it started with me talking about the SEC case being over. And then I talked about what core coin I'm buying primarily, which is PulseX. Oh yeah, and then that brought me to the 333 million PulseX. Yeah, so I think that that's a very good goal to reach for. Let me see what else we got in here. 333 million would cost how much? Let me see what's the price of PulseX right now. Let me pull it up. Let's see. PulseX. Price of PulseX is 4025. 4025. So let's multiply that to find out how much it would cost you to get 333 million currently at that price. Let's see. Damn, where's my calculator? I don't want this. I want my calculator. Yo, my computer, I don't even know how I got there. All right, anyway, 333 million times 0.12345. Roughly about $8,300. So it would cost about $8,300 to get 333 million PulseX. And that has the potential at 100x to turn into over $1 million. That's kind of crazy. It's kind of crazy. Yep. So currently around $8,300. This is what can happen. This is what I believe will very easily happen as we move into the future. Let me see. Let me see. What else we got in here? King Apex, what's happening? Jay Perry, what's happening? There you go. Yeah, and I'm comfortable with my Hex bag. I'm comfortable with my PulseChain bag for now. I'm still building up the PulseX bag. I think now I'm over. I should have like over 100 million PulseX if I'm not mistaken. For a while I was buying PDI, but I'm very comfortable with my PDI bag as well. So I'm shifting now back to PulseX. Am I still buying silver? I will always be buying physical silver and physical gold. Yes, sir. Swaggy PulseX or PLSX. There are two coins on the PulseChain network that you can probably be confused about. PLS is the gas token. That's the core token for PulseChain. And then PulseX represents the token of the exchange, the token of the DEX, the decentralized exchange that PulseChain operates on. So the DEX is the actual exchange where you actually can swap coin to coin. So it's similar to how Coinbase is an exchange. What's another exchange that you can use? What's the other one for Ethereum? What's the exchange for Ethereum called? Well, I can't think of this shit. What's the exchange called for Ethereum? Why can't I think of this shit? That's crazy. It's just not coming to me. But y'all know what I'm talking about. It's what PulseX was. PulseX is a copy of that exchange on the Ethereum network. But anyway, the network, the exchange is where you swap your coins. That's where you actually swap from one coin to the other. So say on Ethereum, I wanted to swap Uniswap. That's the name. So if I'm on the Ethereum network, for example, and I want to swap my Ethereum for Hex on Ethereum, I would have to use Uniswap. That's the exchange that I'm actually able to swap that coin for. That's how I turn my Ethereum into Hex on Ethereum network. If I'm on PulseChain's network, I go to PulseX. That's the equivalent of Uniswap on the PulseChain network. If I have the gas token on PulseChain, which is PLS, I can use that PLS and swap it for whatever tokens that I want to swap for that are on the PulseChain network. So if I want to buy Hex on PulseChain, I take some of my Pulse, my PLS, and I can buy Hex. If I want to buy the PulseX token, PLSX, I can take my PLS and swap it for PLSX. So that's actually how you get PulseX. You have to get Pulse first, and then you can swap that into any of the coins that you want to buy. So in this case, you want to buy PulseX, you would be swapping from PLS to PLSX. Okay. Let me see. When do you believe the bear market will start, or do you feel like it started? No, the bull market hasn't even started. See, this is the thing about cycles. The euphoria, we're still a ways away from that. That it hasn't happened yet. The timing is here, so this is the window of when the bull market will begin, and we're right on track because Bitcoin always goes up first. So Bitcoin has been moving up first. After Bitcoin, then comes Ethereum, and then comes the altcoins, or basically every other coin that's not Bitcoin, that goes under the Ethereum. If you want to look at this, that way. So it starts with Bitcoin, then Ethereum, and then after that, all the altcoins. So we would fall underneath the Ethereum and altcoin umbrella because we're very, what's the word I'm looking for? We're connected to Ethereum. Like we're, what is the word I'm looking for? I think it starts with a C. Correlated. We're highly correlated to Ethereum because PulseChain is an actual copy of Ethereum. It's literally the copy of Ethereum, and every token that was on Ethereum was copied over to PulseChain. This is when PulseChain launched back in 2023. So we're highly correlated to what Ethereum does, and if you look at what Ethereum has been doing, it's just been going down. Now, people are looking at that and they're like, oh, we're in the bear market, and the bull market is over. The bull market hasn't even started yet. We're just in a cycle and in a period where you have a lot of new coins launching, a lot of bullshit coins launching, all of these new meme coins, new platforms where you can go and you can degen, which just basically means gamble. You can gamble on all of these new coins that people like to do. People are addicted to gambling. So crypto is also, a space where people that like to gamble, they come into the crypto space and they gamble on coins. People do that. But it's still not going to stop what the intention of crypto was supposed to be. You can't stop that. That's going to be there. And there's only going to be a select group of coins that are going to last and stand the test of time. That's the big deal. Out of all of this shit that's out there in the crypto space, what coins are going to be here 10 years from now? What coins are going to be here 15 years from now? This is how you have to be thinking. The same way that now Bitcoin is how old? 14 years? So Bitcoin ain't going nowhere. Ethereum is like 9 years old, I believe. Ethereum is not going nowhere. So now the only thing that you have left after that is the altcoins and decentralized finance. Because remember that Bitcoin and Ethereum, they have been centralized to a degree because exchanges have required, or I should say exchanges are required, to collect your personal information and basically keep track of all of your transactions on their exchange. So this is what happens when your money or your coins are sitting on an exchange. They're keeping track of the purchases that you make, how much you bought. They know who you are, right? They're keeping track of all of this information. But this is not what the original intention of crypto was supposed to be. Now, that cannot be done that way in the DeFi space. This is where we are. PulseChain, Hex, PulseX, this is all in the DeFi space. And even the narrative for PDI represents a stablecoin narrative on, or I should say in the DeFi space. So in DeFi, you're going to need a stablecoin as well. The same way that you have a stablecoin, you know, when you're swapping out your Bitcoin or swapping out your Ethereum. You can swap your Bitcoin, you know, for example, for DAI on Ethereum. You can swap it for USDC. You can swap it for USDT. Those stable coins are pegged to $1. So when you swap out of a coin like Ethereum, just as an example, you swap out of Ethereum and then it sits in the stable coin and it locks in the amount that you swapped into the stable coin. So now you have that amount of value sitting in the stable, no longer fluctuating in value because it's in a stable coin that's valued at $1. So it's kind of like how in the stock market, you know, you would sell your stock and then it would sit in the money market fund. Or they call it, what do they call it? They call it the, I forgot what they call it, but basically it's when you sell the stock, it sits in the actual money market account or whatever the stable account is in your stock portfolio. It's the same dynamic. So anytime you're selling an asset, that value needs to sit somewhere until you're ready to buy something else or until you're ready to withdraw that money, you know, to your bank account and then do whatever you're going to do with that money. So in the crypto space, you have that exact same dynamic. You have it on Ethereum. Ethereum has its stable coins. You have DAI, you have USDC, you have USDT. Okay. So in the DeFi space, we're going to need the same thing. We need a stable coin. When you're ready to swap out a Pulse into a stable coin, where are you going to swap into? You see? What protocol can you use where you can earn a yield? This is what is associated with stable coins as well. Stable coin, while your money's sitting there and you're trying to figure out what you're going to do with the money that you swapped out of an actual asset, you can be earning yield on that money depending on which stable coin you have it sitting in. USDC might be offering yield. USDT might be offering yield. DAI could be offering yield. Out of the three, DAI is the only one that doesn't have admin keys attached to it. So no one is in control of the DAI solely versus USDT where Tether controls that. USDC company called Circle controls that. They have the admin keys for those stable coins. So if they wanted to, they could just rug the coin. They're not going to do that, but I'm just saying. They could, technically, it could be done. But it can't be done with the coin that doesn't have admin keys attached to it, which is what DAI is. That's why the whole narrative for PDI is a big deal on PulseChain. But anyway, this is supposed to be a live market observation. I'm talking about other shit. but it's cool. It's cool. It's all connected. It is all connected. All right, here it goes, a Nadex question. How do you feel about the $10 thing that Nadex is doing also? I mean, I think that it's a way for them to expand to a broader audience of people that don't want to necessarily risk as much as $100 on a trade. You know, so I mean, like for us, it's roughly about $81 that we would be risking on one contract. So now that, you know, turns into $8 on one contract. So now you need 10 contracts to be the equivalent of what we normally would do. But, you know, I mean, I think that it's a great idea because the more that you can bring a wider audience of people into the platform, the more fees it generates for Nadex. the more fees that they generate, the longer they stay in business, so that we have an opportunity. So when, for people that actually are using the Nadex platform to trade on and who are successful and are profitable, you want Nadex to be around forever. Like, I want Nadex to be here forever. People get pissed off at a platform when they can't be profitable on it. This is why people don't like Nadex or don't like QUOTEX or, any platform that they're using, because they're like, oh, they're cheating, or, I can't make any money on the platform. What it is you have to learn the market. And here we go into the live market observation. Here we go right into where we need to be. You need to learn the market. So, and let me keep going and just make sure I'm not missing anything. Yeah, so that's my thoughts on the $10 contracts. Let me see. I think it might be a required thing, so you'll have to scale up the base size of your minimum contracts to make sense of pricing, but it should allow you to scale up faster. Yeah, all it's doing is multiplying what you normally would do by 10. So if you normally would start your account with $100, which is how we do it, we start with $100. We know that on one trade, that first trade that you take is gonna cost you $81. So all it turns into now is, okay, now instead of it being one contract, it's gonna be 10 contracts. So for me to trade the $81 on the new scale, all I'm doing is multiplying that one contract by 10. So now instead of me starting with one contract, I'm starting with 10. That's all it is. That's all it is. So, just as an example, once I get to 50 contracts, or what would normally be 50 contracts, it'll be 500 contracts instead of 50. So now 50 contracts, the way that we're used to seeing it, is now 500 contracts. Because the multiplier is 10, because you're starting with a $10 scale. That's all it is. It's simple math. It's simple math. It's going to be the same shit that we doing. Yep, same shit that we doing. Yeah, I mean, and there's a lot going on with the P-Dot narrative, and everything is risky in the sense that you don't know when or if anything is necessarily going to happen. But you have to dig into understanding the substance of what an opportunity is. That's all. Once you understand that, then you can, distribute your investments accordingly. Like, I don't have a large percentage in PDOT of my overall portfolio. Not at all. I just have a bag. I got a bag I'm comfortable with. Let me give y'all a good example. I took my time acquiring 1 million PDOT, right? When that dip took place, when the guy Maria and whoever else was selling all of their PDOT, and we saw that wick that went all the way down, there was a moment where you could have got 1 million PDOT for like $100 and something. And I took advantage of that moment. So just like that, I doubled my bag size. And mind you, I didn't even use new funds. I used the existing coins that I had in my wallet, and all I did was swap. That was it. I had some PulseChain in the wallet. I saw the movement. I swapped. I doubled my bag. Just like that. This is what I mean about opportunity. So, let's say that PDOT is going to 10 cents, right? 10 cents is 10x away from $1. You know that $1 means that every million is $1 million, right? But if it doesn't even hit a dollar, if it hits just 10 cents, that's $100,000 for the coins that you're holding. And mind you, that's a whole separate narrative altogether than what it is that we're doing just in PulseChain in general with Hex. Like, we already know what Hex is. We know Hex is going into the dollars. I got a bag of Hex. I know PulseX is definitely going where it's going to go. PulseX is probably PulseX to me is the most powerful out of everything. I would say even a little bit more powerful than Hex to me. And I don't say that lightly because I love Hex and I understand what Hex is about. But PulseX has buy and burn in it. It has the tokenomics built into it that is making it more and more rare every day. That scarcity over time, like it's just constantly just buying it, burning it, buying it, burning it, buy it, burn, burn. All of that buy pressure inevitably is going to push the price up as it burns the tokens that bought into the coin through the mechanism. That's insane. So you got two mechanisms that are contributing to buy pressure of the coin. So what happens when people really start buying the coin? You have them buying, then you have the buy and burn buying, everybody buying, trying to get this coin because they now understand the coin. But it took them 5, 6, 7 years to understand what it was. That's what we're dealing with. People don't understand what none of this shit is. But that's why, like, you know, all of this content that we're putting out just in the community is helping to educate people and just raise awareness of the DeFi space. What happens when people realize, oh shit, yo, Coinbase can freeze your assets. What happens when the bull market is in full bloom and somebody can't get to their coins? What happens when the market's up and you can't get into your wallet to sell your coins? What's going to happen? People are going to start waking up like, oh shit, this is crazy. I got to get my money off of Coinbase. Damn, well, where can I put it? In DeFi, perhaps? Where crypto was basically created to be? Decentralized, anonymous? Freedom? I'm just saying. It takes time for education to reach the masses of people that are involved in an industry. And like that shit don't happen overnight. It takes years. But the thing is that it happens. And the question is, well, who's still holding this thing that everybody wants now? Who's been holding it the whole time? Who has the most of this stuff? It makes you wonder about how, just Bitcoin. Take, but not even Bitcoin. Take Ethereum as an example. There was a time when Ethereum was under $1. It was like 30 cents, something crazy. Who still has a bunch of Ethereum that they bought when it was under $1? Even with the movement down, Ethereum is still at what, $1,700-$1,800 now? What if you were buying and just acquiring that coin because you knew, well, in the future, I know that this smart contract shit is going to mean something. I don't know what it means yet, but it's going to mean something. And I'm just using this as an example, like, you know, because the Bitcoin thing, because Bitcoin was the first one, I understand you being more reluctant to hold on to it because you really don't know what any of this shit is. We don't even know what crypto is yet in early Bitcoin. So I won't even use Bitcoin, but let's take Ethereum. What if you were acquiring Ethereum early on just because you're like, you know what, that Bitcoin thing did something crazy. You know, this Ethereum thing might do something crazy too. They're saying that this is the next layer. You know what, let me just buy some of this shit and just hold it. What if you just happen to acquire 1,000 Ethereum and you still have it now? This is what we're dealing with in crypto. So there's way more understanding and way more education now than ever. You know, in the early days of Bitcoin and even the early days of Ethereum. But with Ethereum, there was more awareness because you had Bitcoin as the precedence. So you knew what crypto was capable of doing through Bitcoin. You knew. Like, you know what? This Bitcoin is crazy. This thing did something nuts. And then you took the leap and you just were like, hey, this Ethereum thing makes sense too. Maybe this will be like how Bitcoin was. Well, let me just hold on to it just in case. That's how you have to think in this space, just in case. But I mean, it's so obvious with PulseChain. Like the PulseChain ecosystem and the Hex ecosystem is just obvious. Like think about the fact that the SEC went after Richard Hart. Like, wait, hold up. This guy here is creating something that's going to be a problem. We need to get this shit. And they couldn't get it. They couldn't stop it. You know why? Because you can't stop DeFi. If the government can't stop it, what is that telling you? And they have unlimited money. They dragged the court case for years. What does Richard Hart do? Well, this is a smart guy. He got money. He goes and hires the best lawyers money can buy. The same lawyers that Trump and them use. And a bunch of other rich people. He hires them. And then he beats the government. This is what we're dealing with. This is why I'm saying it's so obvious. It's like, okay, damn. Who beat the SEC? Very few. It's 1%. We're in the same tokens created by the same guy that beat the SEC on every token. Mind you, the lawsuit included all of the tokens. It was Hex, PulseX, and Pulse. They called them alter egos of him. Oh, these are his alter egos. So you lose on jurisdiction, and then you lose on what they are, because you're trying to call them securities. The judge asked them straight up, well, where's the blockchain? They couldn't answer it. It's freedom. Come on, man. So anyway, that's why I'm saying that it's obvious. Like PulseChain is a no-brainer at this point. Yep. Yes, PulseChain is also a coin. It is a blockchain. As a matter of fact, it's the same exact code as Ethereum. The code is exactly the same. The only difference is the pricing. Every token that had existed on Ethereum on the day that PulseChain launched copied over to PulseChain. All of the tokens. So, let's see. Yeah, so I'm reading this. The liquidity is also something that's going to increase. Yes, that is true. Yep. The liquidity will probably increase by 10x. Excuse me. Can't they just centralize Hex if they wanted to? No, they cannot. Nope, because Hex is a code. Hex is a code. Nothing really compares to Nadex profit in the 5 minutes. It's guaranteed with skill. I would agree. What is stability and why is it so important? Stability in the market is when the market begins to visibly and obviously stop moving erratically. I think that that's a good way to describe stability. It's when you begin to see the market remaining in a certain area for a period of time. So it's one of the reasons that you'll see me often use what I call the box. And I'm going to draw a box now so I can show you what I'm talking about. So I'll take the box. So I'll draw it out. And all the box is me literally taking the strike prices of what's currently on the chart. So the strike prices are separated by 2 pips. If you look at the last digit of the strike, so for example, this one is 1.1395 and this one is 1.1393. So the 1393 is the strike price under the 1395. And that difference is 2 pips. The last digit, all you're doing is just subtracting the numbers. So 5 minus 3 is 2. Same way that 7 minus 5 is 2, which is the strike price above it. What the hell just happened to my box? They took my box away. Now let me draw my box back. Where we at? Right there. So the box, it just represents a visual of the space or the area between the 2 strike prices. That's how I'm drawing the box from top to bottom. So I start here at the top strike, 1395, and I draw it down to 1393, and it creates the box. And I'm dragging it across to the right from the candle that represents the last candle of a binary and what represents the first candle of a binary. So now when you're looking in the box, you're seeing the candle that the binary begins on, which is this one, and then the candle that the binary ends on, which is this one. So the candles that are inside the box represent the start and finish of the binary, because the binary is for 5 minutes. So the box will have 5 candles in it. Does that make sense? You see, so when I move the box up here to this area, because this is where the current movement is, now I'm looking at the space between these 2 strikes and what the current movement or the current activity of the candles are doing. So when the market starts to stabilize, what it begins to do is it begins to remain between the space of 2 strikes. It'll start doing this inevitably. And as it does this, that stability in the market leads to the market continuously doing this. So you see how right now, just a moment ago on this candle, the price was inside the box. And then on the current candle, right now, the price is moving outside the box and going down. This is less stability in the market overall. It's more volatility in the market, because look at how far also the movement is traveling. It just went through 3 strikes. It went through this one, and now it's all the way down here at this strike. So there's a lot of movement in the market currently. more movement typically is associated with less stability. Less movement is typically associated with more stability. And learning how to understand the movement of the market is what allows you to trade these binaries successfully and be profitable. Now, can the market be stable when it's moving this way? Yes, it can. Because the movement can move to a position and then remain in that position. So like you can have the market move down to this area and then the market begins to stay down there, for example, or continue to move in the same direction. When you have stability during those times or during those moments, that's what we call vertical stability, because the movement is taking the market from one position to another. But when it goes and it arrives at the new position, it either stays there or continues to move in that same direction. So just studying movement in the market alone is what allows you to develop the eye to be able to see the market for what it is at the time. If the market is not stable and is doing too much back and forth, and one moment is down here, now it's all the way back up here. That's a lot of unstable market behavior. The more unstable the movement is, the higher the chances of you losing a trade that you place on the binaries. Why? Because how do you win a trade? How do you end up in a profitable trade? You end up in a profitable trade by the market ending either above or below the strike price that you have selected to trade. You see? So for example, let's say I'm looking at this right here as an opportunity. In order for me to win this trade, if I were to take this now, I could sell right now for example, I could sell this at, say, 20. If I sold this at 20, by the time this clock runs out, the market has to remain below the top of the green box right here, or where you see this red line. It has to end under this line because I'm selling. If I'm selling this strike, market has to remain below that line by the time the clock runs out. If the market does that, I win the trade. So that $20 that I'm selling for, that would be the amount of profit that I earned on the trade minus the fees for the actual transaction, which would be about $2. So I would earn a net profit of $18 on that trade. Now, in order to complete that trade, if I were to lose the trade, I would be losing the difference between 100 and that 20 or $80. That's the risk on the trade if I'm wrong. So that's the simple explanation of how you win a binary options trade, how much you're risking and how much you would be earning, at least by trading this way that I'm breaking down. If you traded this way and you traded at those prices, that's how you would be earning, and that's what you could potentially be losing if you're incorrect. So hopefully that made sense. Aaron, I don't provide this. At least not in real time. The one thing that you can do is learn how to copy the way that I'm interpreting the movement. That's really learning how, the valuable skill that you'll be able to take and apply yourself in the market. Because that's all I'm doing. I'm literally looking at the market and waiting for the market to stabilize before I take a trade. So that's all I'm doing. Yeah, Walker, I mean, prices are still low right now. Like it's taking people a while to digest everything happening in the ecosystem for Hex. And that's a good thing. That's working to our advantage because it is keeping prices low, like for a long period of time now. It's giving us a lot of opportunity to accumulate. Even if it's a very small amount each week, $20, whatever it is. Buy whatever you're going to buy. Hex, PulseChain, PulseX. Just get into the ecosystem and accumulate. So, I always talk about what I'm doing at the time. So right now I'm focusing on PulseX because I'm comfortable with my bag sizes for everything else. So I'm comfortable with my Pulse, my Pulse bag. I'm comfortable with my PDI bag, and I'm comfortable with my Hex bag. And yes, we very often are in the same trades. That is very, very, very accurate. Hands can't hit what the eyes can't see. Float like a butterfly, sting like a bee. Yes, sir. He said he ain't been live in a minute. You'll starve. Oh shit, that's hilarious. Oh, I still got my thing on here? Yeah, it's still on there. Yo, you said you'll starve. Basket is saying he quit trading on Nadex, planning on moving to Forex since the risk to reward will be better for me. That is subjective. That is definitely subjective, Basket. I think that the risk reward is the best with Nadex binaries. Is the best. And can I break that down quick? Let me see if I can break down what I mean by that. In Forex, how long would it take you to 2x your account? Let's say that you started your Forex account with $100 for purposes of this example. And you probably can't start with that little of an amount to really do anything because you need to take a lot of trades. So you would have to be using high leverage, and you would have to also be in a micro account, a micro Forex account, where your contract size and the pip sizes are small. So it'd probably be like 10 cents a pip. And this is for you to have each trade with a set amount of risk reward on it. So let's say that your trades were 1-to-1. Even though I don't want to use that because most people don't do that. Most people don't trade that way on Forex. Most people try to get a higher reward than they do for the risk. So let me go back to when I traded Forex. When I used to trade Forex, I used to typically set my risk reward at 2-to-1. So if I was risking $50, my reward would be $100, meaning that $50 would be based on whatever the stop loss was for the trade. Stop loss might be 30 pips. And my reward would be 60 pips because it's 2-to-1. Okay. So if I win the trade, if my risk reward is, what did I say? $50? Did I say 50? I think I said 50. Well, let's use 50. If I'm risking 50, it means that I could make 100, right? So the stop loss is based on $50 and the take profit is based on $100. It doesn't matter where on the chart, but those are the dollar amounts. Most of the time, you'll be in a trade and let's say that your take profit is 100 pips away. Your stop is 50 pips away, your take profit is 100 pips away, right? When I traded on Forex, I used to trade the pound yen. Pound yen used to be moving like 800 pips a day. So I always would have that type of room on that pair because it was a very high volume pair. It moved a lot, and that's what you need when you're using those sizes for your stop loss and for your take profit. So if I risk 50 pips, my take profit is 100 pips away from wherever I enter that. So you got my entry, then you got the stop loss, then you got the take profit. And of course, I would use technical analysis to figure out where I'm entering. So my entry would be based off of, for example, if I'm buying, I'm probably using a support level that's nearby as where I'm going to position my stop price, right? So if that's 50 pips away, then my take profit is going to be 100 pips away from wherever I enter that. Market does what it does after you get in the trade. You know what your risk is. You know what your take profit is. How does it play out most of the time? Majority of the time, you're probably going to take your profit early because as soon as you get in profit, you're going to start moving up the stop loss. So now the stop loss goes from being at 50. You probably move it up to break even. Then now you say, oh, now I got a risk-free trade. And correct me if I'm wrong. This is how people trade in Forex. My stop is at break even. Cool. I'm in a risk-free trade now. Now, the market has to hit your take profit now for you to achieve the reward on that trade. Let's say that the market goes up 80. So it didn't reach 100 pips. It only got to 80 pips. And then it retraces and it comes back down and you lose half of those pips. So now you're at plus 40. What do you do with the stop loss? What do most people do? They're looking at, oh man, I was at 80. Now I'm at 40. Man, should I just exit the trade? And y'all correct me if I'm wrong. All you Forex traders out there, y'all correct me if I'm wrong. Oh, it said, man, I was at 80, now I'm at 40. Man, what should I do? All right, let me move up the stop. So now you move the stop up from 0 or break even, and let's say you move it up to 15. Right? So now you're like, in your mind, all right, so if I get stopped out, I'm still gonna make $15. And what happens? You get stopped out. Right? So in your mind, you're like, damn, that sucked. That sucked. Because I was up 80. I should have just took profit early when it got to 80. But you didn't know it was going to go from 80 and then it was going to come all the way back down to 15. You didn't know that. You see? So what happens is you start getting emotional now when you're in a trade because you're seeing shit happen. You're looking at the price go up. Yes, look at, boom, look at this. This is it right here, boom. So you don't leave the trade on. You're going to exit the trade early, either by moving up the stop or just exiting the trade because you're looking at profit that you had that you don't have now, and you don't want it to go all the way back to break even. So you just get out the trade. Fuck it. I'm just going to get out. So now what you're doing is you are you're diminishing the whole risk reward argument because the risk reward is not 2-to-1. How many of your trades actually finish? How many of your trades do you allow to finish? I've seen trades where the market went up 9 to 95, didn't hit 100, went to 95 and came all the way back and reversed and got stopped out. Are you going to sit in the trade and let it do that? I'm just asking. Because in order to achieve the risk reward, you have to do that on every trade. Otherwise, you're not really getting 2-to-1. You're getting a bunch of other shit in between. But what happens is when you get stopped out, you get stopped out fully. So let's say that for 3 of the trades, a similar scenario plays out 3 times. It goes up first. It goes in your favor first. Oh, man, yeah, the market is up. Cool. Oh, I'm up 50. Man, I'm up 50, man. I don't know. Maybe let me move up my stop to break even. You move it up to break even. Market comes back, boom, you get stopped out. So you made 0 pips. Second trade goes up 60. You move it up to break even again. Then you're looking, you see it coming back down. It comes back down to 30. Fuck it, man. I lost half my profit. Let me exit right here. So you exit at 30. Okay, cool. Second trade, you made 30 pips. So that's 2 trades. But you're only up 30 pips. Versus 2 trades and you're up 200 pips. Am I making sense? See, nobody talks about this in Forex. This is why you guys really benefit from a lot of shit that I've done in the past, because I can share specific details of the way that I used to do things and the way that I used to see other people doing things. I was one of very few traders that I knew that would hold the trade the whole time and just be like, it is what it is. This is how we got to do it. The majority of people did not trade like that. They was shook. They were scared to death. They would be doing all the shit that I'm talking about. Oh man, I was up 60, now it's up 30. I'm just gonna take profit. Fuck it. All right, you keep doing that. Boom, trade number 3 comes. This time it goes up 85 pips. Now you get more aggressive. You're like, all right, I'm gonna lock in 50 pips. So you move your stop up to 50, boom, you get stopped out. So now that's 3 trades. You made 0, 30, and then 50. That's 80 pips. Not 300 pips, 80 pips. And then on the 4th trade, you get stopped out on the 4th trade. So now you're down 80 minus 50. So you're only up 30 pips. So out of 4 trades you took, you only made 30 pips. You see where I'm going? Versus if you would have let them play out, you probably would have got the first 3 trades to hit your take profit. That would have been 300 pips, and you get stopped out on the last trade. That would have only been the 50, and you would have made 250 pips. But you didn't have the nuts to hold on to the trades. You turned into a bitch. I'm just saying, you bitched up. And it's understandable because in trading, you get emotional when you see the market moving. You're like, oh shit. Oh man, I don't want to lose these pips. The objective is to stick to the money management. If you don't stick to the money management, your risk reward is out the door. So that's my thought process on when you're trading Forex. That's why I don't trade Forex anymore, because when you're trading binaries, the risk reward is way different. First of all, how much is it going to take for me to double my account in Forex? How many trades? And not only that, These are trades you have to hold on to. You got to let the whole trade play out. That means that shit could go up to 90 and then get stopped out. So you were up 90, but then you ended up being down 50 pips because the trade got stopped out because it never reached the take profit. You got the balls to deal with that? Are you disciplined enough to just be like, hey, it is what it is. This is what I'm doing. Very few people can do it. So that's why when you actually play it out, it's not the same at all. Versus now you come to binaries. You can be on Nadex, and let's say that you only want to put $50 in the account. You can do that now with these $10 contracts. But let's not, I ain't even gonna go into the $10 contracts yet. Let's just do it the way that it is now. $100. That's what we start with. $100. Every trade we're gonna risk 80, and if we win, we're gonna make 20. That's it. Simple. That means in 4 trades, the account doubles. So all I have to do is be very intentional with the way that I'm looking at the market so that I'm profitable on my trades consistently. That's it. You see? So it's not about as much of the risk reward factor as it is about you learning how to understand the market movement. That's the key. If you do that first, risk reward is not even an issue. We don't think about no risk reward. Not with binaries. We're not even thinking about that. All right, I put $100 in here. That's it. I ain't putting no more. Then we go from there. So Walker is saying trading Forex or any instrument is usually based on potential. With skill, at least on Nadex, you're trading what is happening, not what you think will happen. Yes. Yes, I couldn't have said that better myself. That's hard. You're trading what is happening, not what you think will happen. There we go. Yep. There we go. And this is hard too. To achieve the risk reward that you want, you have to have skill. So the problem isn't your risk reward, it's your skill. This is it, man. This is it. Look. You see how smart this group is? This is why you gotta fuck with us. You have to fuck with Team Alliance. Look how smart and intelligent we are. This is just being smart. People don't realize how good a consistent 20% return is. Facts. 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 And just see, and this is another thing too that you have to realize, like just by simply being consistent, it doesn't take a lot of trades to position you to earn a lot of money. Crazy. 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 On this platform, literally within 20 some trades, if not less. I mean, I'll say in 15 trades. 15 trades, you can position yourself to do a lot. Let me look at my thing right here. You see where you would be at 15 trades. 15 trades, you would be roughly at about 16 contracts, right? 16 contracts is earning you $288 a trade. A trade. So just do the math on that. If you trade in 2 times in a week, that sounds like $560 to me. of cash flow, mind you, in an account you started with $100 with, and you only got in that position within 15 trades. And you can put yourself in a much higher position by just continuing on for longer. So let's say you did it for 20 trades. Let me see what 20 trades put you. 20 trades put you around 44 contracts. 44 contracts is around $790 a trade per trade. If you did one a week, that's $3,000 a month right there. I'm just saying, this is we have the tools to allow you to do what I'm suggesting. All the tools are here. And they ain't go nowhere. Now, mind you, I haven't done a live stream. Let me see when the last time I did a live was. Let me see when the last time was that I did a live market observation for Nadex. Let me see some. Because I want to show you how long it's been just to prove a point. My last live market observation was January 19th. Oh, shit. January 19th, February, March, April. That's 3 months and 9 days. So 99 days, roughly. I have not done a live stream in 99 days. But there's so much powerful content that's already in existence. And now, mind you, even if you're not in the group, you can watch the live market observations. You can see me moving this box around and plotting my lines and looking at the market and looking at the movement. You can look and see how the market was moving at the time that I did the observation. You can begin to learn how to understand the movement of the market just by listening to me on a live. And just with the live market observations alone, there's 112, well now, 112 of them. 112 videos. Just on this. Then you got coffee and charts. We didn't even get into the group yet. We didn't even get into training yet. This is just what's available on the YouTube channel for you to watch. Then you got the projects. You got the projects. Let me look at some of these playlists because I'm going back in time now. Let me go back in time a little bit. Look at some of these playlists. Shit is crazy. Damn, it's a lot on here, man. Shit. This shit is crazy. This shit is nuts. Yo, I'm in a YouTube studio right now looking. This shit is insane. There's so many playlists on here. It's crazy. Got Project 21. You got 30 trades in 30 days. These are playlists of actual projects that I did recording the trades. You got all the Starbucks videos. You got Project Freedom. Yo. This is just video sitting here on the channel. And when you open up and you go down this rabbit hole and you start watching, you realize what it is that you have as an opportunity on this Nadex platform, for real. You start to realize what this shit is really allowing you to do, and the opportunity that has given you, like, for real. Because it'd be so funny to me when people ask me, do I still trade? I'm like, are you serious? Oh my God, I forgot. Right, 1 a day challenge. Ask Mark anything. Yo, it's insane. Right, then the OG videos. Yes, them early Starbucks videos. Yo. Crazy. Right, Brooklyn Moses podcast. All right, man, that's enough shit. Crazy. This is years and years and years and years and years of content. Crazy, man. Ooh, this is hard. You had a multi-million-dollar business in your back pocket this whole time. You just need training. Come on, man. Come on. He said he's been coasting on 1 trade a month average for a 3-year plan. Damn near zero pressure and allows more focus on skill refinement. Facts. Facts. Come on now. Yeah, 301 still on repeat. Matter of fact, let me see how many views is on that bad boy now. See if I can find it. I gotta go back now. Back to the grill again. The grill again. 301 playlist. Yeah, there was a time. Y'all remember when I was counting the views? How many times that how many views I had? The number got so big, I just stopped. I'm like, you know what? I done lost track now. I don't even know. But I know that just me alone, I'm personally responsible for at least, I give it about 75% of the views on that video. About 75%. Yep, full clarity got, and I don't even know if this is accurate. It seems like it's more than this. Something happened to the views. There was over 100,000 views on this video, and they saying it's 71,000 now. So I don't know what happened. Something happened. They did something funny with the views. Cause I know that this was over 100,000 views on it, but it's saying 71,000 views. But anyway, that's still a lot. We'll take that. So if you do the math, let's say I'm only at 50% of the views. If you do the math, that means that I personally watched this video 35,000 times. Just me. Just me. 301 on repeat. Crazy. So when you talk about training, this is how we train. He said I should put the ads on it. Oh man. Yeah, and this is true. Yep. 30 years. 30 years. Right. On the humble.
Shut up! Shut up! Shut up!
You said them ads started popping up. I'm gonna make my own damn 301. Oh snap! Oh, so that's what. Okay, not allowing the same server to add a view count. Okay, yeah, because I noted them views was over that. I'm like, I don't know what they doing with the numbers, but they doing something. Yep. All right. So listen, while I have you on, if you have any questions that you would like to ask pertaining to the market, the way that we observe the market, the Nadex platform, if you have any questions, now is your time to ask. Now is the time. And you're starting to see, and look, this is where it starts getting interesting. You see how the candles are looking different now? You see how big the candles are back here? Big old candles, big moves. You see how in this area right here, candles are getting smaller, ain't they? See, this is what I mean about the market stabilizing. As the market becomes more stable, this means that it moves to a point, moves to another point, moves back and retests the point that it was at, respects it, moves back to the previous point where it was at, respects it, and it starts doing that more often and more consistently until it begins to create a range. And a range is just an area that the market is remaining in for a period of time. So not only does the overall market range, but the individual candles start ranging. What do I mean by that? If you look at the size of the candles start to look similar to one another. They start looking the same size, top to bottom, the same height. So stability transcends not only into the overall market movement, it transcends the individual candles that you see. So you're looking at the size of the candles and you start seeing stability present itself through the candles. So this is powerful shit. And through observation, you begin to learn and understand the movement with more efficiency. And then as you do that, now when you start looking at trade opportunities, the trades begin to become the easiest part of the process. Selecting a trade is not hard. It's knowing when to be in a trade. That is the challenge. That's the challenge. So the only thing that can allow you to determine when that time is appropriate is when the market is in a stable behavior. You see? When the market is consistently stable, it makes it easier, not even easier, it makes it easy, period, and obvious as far as whether or not you should even be in a trade. This is the perfect, I like this. I'm starting to feel the market. If you go back to some of my past content, this is something that I used to always say. You have to feel the market. This is before I started to develop MRMH and, Mark's rule. Before all of that, I used to just say feeling the market because I didn't have the words yet to put or to use to describe what it was. But that's literally what you're learning how to do is feel the market, feel the movement. It's like a puzzle that you're learning how to put together. Yeah, remember the market recaps? Yo, you used to be doing all type of shit, man. Used to be doing the lives in the car. Yeah, there's so much content on the channel. It's insane, man. Like, it really is, for real. It's crazy. Crazy, man. Y'all remember everything. Damn. Yep. Right. Conversations with the Fullers, all of that. Yep. The vertical lines, I put those on the last candle of the binary. So if you look, it's always going to be the 9 and the 4. So if you look here, for example, you see where it says 23:59, that's 11:59 p.m. You see this one here? It says 04. That's going to be 12:04, which is now. So the time is 12:04. That's the last candle of this binary. This is the last minute of the binary. You can see the time right here. We only got 48 seconds left in this last minute. So those vertical lines I just position on the last candle, because remember that the most important candle of the binary is the last one, because it's going to determine where the market ends up. So for example, let's say that you were in a trade here and you had sold. If you sold, then that means that this line right here is your line in the sand. In order for you to win this trade, if you're selling here, it means that this candle needs to remain underneath this red line. And right now you're on the last candle of this binary. So what it does during this last candle is going to determine whether or not it stays under here or it does something else. So that's all the vertical lines are for, just for visuals. So, you know, the box and the vertical lines, they're just visual tools that I use on the chart to just create the visual structure, to just make everything easier to see and easier to observe as you're doing your observation. Like I can get another line and put it right over here on the next one. So the 09 is going to be the last minute of this current binary that we're in. Then I can take my box and move it right over here. You see how the box fits right there? The box fits right there. So the top of the box is this strike price, the 13.91. And the bottom of the box is this strike price, the 13.89. So I know that these are the relevant strike prices for where the market currently is. And what do you see inside the box? You see the candles, don't you? You see? So that means the market is under this strike and it's currently over this strike. That's where the candle is right now, inside the box. Just visual. It helps to compartmentalize what it is that you're observing. It's very useful, very powerful. So that makes sense, Apex? It should make sense. Yes, indeed. What do we got right here? All right, y'all. So did y'all have any other questions? Speak now or forever hold your peace. I got a turkey burger waiting for me. Glad to see I'm alive. Yes, sir. Alive and well. Yes, sir. Yeah, it's glad to be back. Glad to be back. Yeah, so I've noticed I have been getting an itch as of late. So who knows, if this itch keep up, I'll be coming on again. Yeah, so the The last hex stream I did was really good. You know what's crazy? That last stream I did, the last hex stream I did, that same night was the same night of that first dip. Like literally, it had to be not even an hour after I got off the stream. Pete, I went straight down. Bow. I was like, wow. Look at this opportunity. Look at this shit. It was like the vibe, like the TA vibe was on it or some shit. It's like, yeah, we're gonna give y'all some opportunity right now. Bow. It went straight down. I didn't even know why it went down. All I saw was the price, and I was like, yep, I'll be getting me some more. Crazy. So this is how the vibe on TA works for real. I'm not even exaggerating, because you can't make that shit up. You cannot make that shit up, man. Have you noticed less sustained stability in the markets these past few months? You mean in the markets that, like, for Nadex? You mean like the euro and the USD CAD and all that? Is that what you're referring to, Walker? I would say not really that much of a difference. I know why you're saying that, but I guess because I'm so used to ignoring when there's no stability that I don't really pay that much attention to when there's no stability. It's like if I come on the markets and I'm observing and I see that the market ain't really doing shit yet, I'll walk away kind of and then come back. If I come back and I start seeing it starting to, stabilize stuff, then I will just wait it out. I'll wait it out. I have my charts up pretty much all day, passively observing. I haven't seen much to justify bringing me to the computer. I can't really say that. And so are you talking about the euro, or are you talking about like how many, like what do you be looking at? You be looking at the euro primarily, or are you looking at other pairs or another pair? Yeah, respect to overall positioning. There's a training that I did talking about positioning. Well, not even a training. What am I talking about? I did a bunch of trainings on it. But positioning is a powerful training that you probably want to watch. That whole series on just the euro. Man, I'm biased towards it being, I'm not gonna say the way that it always has been, but I know that the market always is doing whatever it's doing. So in my mind, I just accept that. And when I see that the market is beginning to look like it wants to stabilize, that's when I will dedicate more time to my observation and then try to see and wait if an opportunity is presented. And the opportunity will always come at some point. And and I trade way less too. I think that has a lot to do with it. I'm only trading like once or twice a week. Got you. And then when you do the lives, you're doing each pair. Okay, I got you. So live market observation 80. All right, so that's the one I recommend that you guys watch. The one that talking about positioning. I think it was positioning and pricing. But I did trainings also in the playlist, in the training playlist on them. So you want to check those out too. I know I did a whole series on positioning and pricing. Unless I'm bugging out. I did so much shit, I honestly don't be remembering. I ain't gonna lie. like it takes. I have to go back in my head or look on the channel to remember shit that I did. I honestly, it's so much on there that it'd be hard to remember. It gets more difficult now, probably than ever. And then I'm distracted by, you know, like family stuff and my kids and all of that. So, yeah, and I don't spend a lot of time observing. By the time I get into a trade, you know, it's like it's over. I log off. Yeah, yeah. I mean, and we always have, you know, training to do. Um, I think that what you also do, you don't mean to do it, but you'll observe, and it's almost like you're looking for the perfect market condition. You don't mean to do that, but you do. You're gonna do that because you've seen instances of how the market has looked, you know, either from trades that I've taken or even, you know, while I may have done an observation. And in your mind, that's what your mind is kind of programmed to wait for. So it's like if you don't see that, you're like, nope, nope, nope. You know, whereas I think that just me personally, because I'm so disciplined, like let's say I just came on, and let me give you an example. Like let's say I just got on the charts, right? Let's say I just came on just now. So the first thing I do is this. I'm literally gonna do exactly this. Like you see how I got the lines already there? I'm gonna do that for about 5-6 binaries, right? Put my lines up there. Right? I'm gonna do this, and then I'm gonna take my box, and then I'm gonna go and I'm gonna put the box on the lines and look and see if any of these are all in the box, any of the candles. So I'll start here. I'm looking. I'm like, okay, they're not all in the box. I go to this one. They're not all in the box. I go to this one. They not all in the box. I go to this one, and I'm looking, and I'm like, okay, here you got 3 in the box. Now you see what I just did? It was now mind you, this is off of just the last 6 binaries. Is that 6? 1, 2, 3, 4, 5. Well, really, the last 5 binaries. So out of the last 5 binaries, 1 binary had 3 candles in the box. Do you see what I just did? I just made something out of nothing. Because now what I'm doing is I'm saying to myself, okay, 1 out of 5 had 3 in the box. Go to the next one. This one got 3 in the box. That's 2 binaries. 2 binaries got 3 in the box. Now we on the next one. So far, this one got 3 in the box. Did you see what I just did? Now, I'm not making this happen. I didn't make the market do this. This is what the market's doing, right? I just happen to be on the chart right now. I'm on the chart. Now, mind you, if I came on earlier and the market was looking like this shit, which it was at the time, you notice at this time I was doing a lot of talking. Was I not? I was doing mad talking. I ain't even put no lines up during all this time. Do y'all see this? This is how subconscious it is for me. During this time, I'm like, ain't nothing going on right now. And these shit is too big. Then we get down here, and I'm starting to see this. Now I start putting my lines up. Naturally, I don't even remember. I literally don't even remember doing this. It's so it's at a subconscious level. I put no thought into this at all. But what I did inevitably was I just isolated the last 5 binaries. Just through my observation right now that I just showed y'all, I saw 2 out of the 5 had 3 candles in the box. This one now that we working on, this one also had 3 candles in the box. So that's 3 candles, not 3 candles. That's 3 binaries now with 3 candles in the box. I'm not doing anything with the information yet, but I'm recording in my head. All right, 3 out of 6 got 3 candles in it. Just a mental note. 3 out of 6 got 3 in it. So now it's 12:20 on the clock, right? I might just watch for like another hour. Why? Because 3 out of the last 6 got 3 candles in the box. It may be nothing. It might be nothing. I don't know. But that right there gives me a reason to continue to observe. Does that make sense? So I'll wait for instances like that. I'll just wait for that. When I see it ain't shit, I'll step away, go do something else. I'll come back and I'll start laying out my lines. When I start seeing that the candles are getting smaller, now let me see what the market has actually been doing. All right, how many of these candles been in the box? When I'm starting to see 2s and 3s, and then I start seeing 4s, oh shit, 4 candles is in the box. All right, let me keep watching. Then I watch it, watch. Next thing you know, all the candles is in the box. It might not happen, but I'm just saying that's how it does end up happening. Now, there's plenty of instances where I'll have all the candles in the box for a long time. Y'all have seen it. You'll have candles in the box for an hour, but no trade will come. But during that observation, you were able to identify that you did have the right market behavior and you had the right environment present, but there just was no opportunity for a trade. And you're okay with that. But the way that I look at that is in my mind, I'm not saying, all right, well, the market hasn't really given off anything yet. In my mind, I'm saying market got close right there. I'll come back a little later and see what it's doing. Make sense? So I think that that's the difference. Yes, this is it right here. That's the key. Exactly. Taking note of the progression. But it's the way that I broke down the progression. Matter of fact, this live, I want you to rewatch this last part I just did, because that's going to help you to isolate the time when you should observe and shift your focus so that you see that progression and you start to see it naturally without any distraction. It's like it just starts to show. The market is showing you. It's like it's just revealing itself until it ain't. Because you might sit there and watch and you're like, all right, it was progressive, but now it's doing some bullshit. Let me log off. If it start getting too erratic and there's too much movement, I'll get off. I'll give it a chance, but if it start doing too much, I'm out. And then I'll just come back on randomly at another time and then do my observation. So another thing too that I think sometimes people will do is you'll be doing too many. And I'm not saying that this is what you're doing, Walker. I'm not saying that this is what any of you are doing. I'm just saying that this is what someone can do. They can start like they'll be doing an observation and now they're looking for a trade. In other words, they're looking to see if a trade is going to set up. But it's like, well, you ain't even there yet. Your candles ain't even in the box yet. But in your mind, you're justifying the fact that you're looking to see if a trade sets up because of how long you've been doing an observation for. Does that make sense? So in your mind, you're like, well, shit, I've been looking at this shit for 2 hours. You naturally, now you're shifting into trade mode a little bit. And you're like, well, let me see if a trade is coming. But we're not looking for a trade. I want to see if candles is in the box. That's all I'm waiting to see. If I'm only seeing one candle in the box for 5 binaries, I'm out. Again, that's progression. If it's progressively not getting stable, I'm out. The same way that if it's progressively becoming stable, I'll continue to observe. Does that make sense? So I'm doing all of this shit subconsciously. I'm not even thinking about it. It's just natural because I'm so used to applying the same observation every time. And I already know in my head what's behind me. So I don't even got to go back now. Like, I don't even have to do this now. I don't got to go back and do none of that now. I did that already. I already know, and I recorded what that was already. So now as I'm looking forward. So I'm only paying attention to what's happening now. Does that make sense? I already know what it is. So now in my mind, I'm like, all right, so it's been about 9 binaries. And out of the 9, only about 3 or 4 of the binaries got candles in the box. Let me see what these next binaries are going to do. You see what I'm saying? All right, 4 out of the last 9 got candles in the box. That's almost half. Is that worth sticking around and looking? Sure. Of course. Because 4 out of 9 turns into 5 out of 10 potentially. Then 6 out of 11. So now you're leaning more towards there being more of the binaries that have candles in the box versus the other way around. If it's progressively getting away from stability, that's cool too. All that's telling me to do is wrap up the observation or step away and come back. So I think that me doing that naturally and like it took it that's a level that you have to reach where you naturally observe that way. I think that that's what it is that you guys are striving to get to the point where you're doing it subconsciously, because you still do it consciously. You make a conscious effort to do an observation. So in your mind, you're like, oh, the market as of late hasn't been doing anything. The market is always doing something. But it's almost like you made up in your mind that the market ain't going to give you nothing. It's kind of like the same dynamic. And again, I'm not saying that that's what you're doing on purpose, but that's what it ends up being. So you want to shift and move yourself away from that, and more so just in the simplicity of, all right, out of the last 5 binaries, how many of them got candles in the box? Start from that. Let's look. So if let's say you just logged on just now. Look at the last 5 binaries. You got 1, 2, 3, 4, and 5. Look at the last 5 and see what it is. All right, here's the first one. That ain't shit. Here's the second one. Okay, got 3 candles in the box. Here's the third one. Okay, 3 candles in the box. Here's the fourth one. Okay, 3 candles in the box. That's 3 out of 4. This one, here's the 5th one. All right, this ain't shit. Here's the 6th one. 3 candles in the box again. You see what I just did that again. Whereas you might have looked at this and been like, nah, this shit ain't doing nothing. You might have looked at this and be like, nah, this shit ain't doing nothing. But you come to find out of the last 6, how many of them got 3 candles in the box? 4. 4 out of 6. And then on the one you're on now, look. Here you got 4. What is that? 4? 4 candles in the box so far. Now you got 4. The last ones you only had 3. What is that telling you about what the market could be doing? You see how quick and this is how fast it happens. This is what I mean. So when you simplify your observation, it opens up your subconscious to do it naturally now without you consciously doing it. I didn't do that consciously just now. I simplified it. Let me look at the last 5 binaries. Whereas if you didn't do it the way that I do it, you could look at this overall and just be like, yeah, these are big candles. Okay. But we're not just looking at candles. What do we primarily want to see? Are the candles in the box? Why is that so important? Because it represents the market beginning to stabilize. Like you have noise here until you make it unnoisy. You have to remove the noise. So it's like, well, how do we do that? Well, we know how to do that. We got to simplify it. And then as you start to simplify that shit, you'll be here and you'll be in position observing when the market finally does stabilize. Then it's ranging. Then next thing you know, it's RCB. Then you see the actual trade set up and you're like, oh shit, here's the trade. That's how it happens. Just like that. Just like that. Already know I'll be adjusting my observation, have been using the lines. And now you see why I use the lines, because you see how it helps to simplify the overall process of what we do. If I don't see the movement in one zone in the box, I don't even think about the market. Right. And you can skip over what the market is doing if you limit it to that. So that right there is probably why. And exactly, I just did an example of it just now where I said, if you just look at the candles, you can in your mind be like, nah, these candles are big. I ain't messing with this. And you just eliminated the fact that you had 4 binaries that had candles in the box, which is ultimately what we're leading to. That's where we're going, really. I'm not even considering the candle sizes yet. Matter of fact, I'm not really considering the candle sizes at all. When I'm in that mode, I'm in the mode of seeing, well, are they even in the box yet? Well, how many candles been in the box over the last 5 binaries? All right, there's only 2 candles in the box. I'll give it a chance. Okay, now there's 3 candles in the box. All right, I'll keep watching. All right, 3 again. 3 again. Long candle, 3 again. 4. This is your observation, mind you. This is you watching now. You and as you're watching, you're doing this in your head. You're like, okay. Now I got 4 in the box. All right, cool. Keep watching. Because now what happens is you'll have 4 in the box, just as an example here. You got, matter of fact, this is all 5 in the box. So you got 5 in the box here. This right here could just simply be a position change. This is not just, oh, the candles are long. Again, if you're doing this, if you do this, you'll be like, yeah, the candles are big. And you may not observe. You might get tired of this and be like, nah, let me log off. Big ass candle. I ain't messing with this. But there's been progression just from the time that we've been doing this example. And you know that out of the majority of these binaries, you have more binaries where there's 3 or more candles in the box so far. So that means this move right here could just be a position change. Put your box down here now. See what happens. See? This might turn into the shit start ranging down here in this box. Then again, it may not. But it might. But all you're doing is watching. So I don't, like, that's the one thing I would say that I don't do is I don't try to use what I'm seeing or what I think I'm seeing consistently as the gauge to what the market overall be doing. I never do that. I treat every observation as an individual observation. It's like, this is my observation right now. It's my observation. Like I make it personal. I'm observing this. All right, so how we gonna break it down? Well, let's look at what the last 5 binaries have done. How many of them candles was in the box? Then when you look, you're like, oh shit, 3 out of the 5 binaries had 3 candles in the box. That changes everything, just like that. That quick. Everything changes. Because it's telling you what the market is potentially doing. And if the market's potentially doing, that means it might end up doing that. And if it ends up doing that, your observation turns into being in a trade that's profitable. Just because you were patient and because you were disciplined in your observation and you just rinsing and repeating the process. It's literally letting the market come to you. Like, people love to say that. Oh, let the market come to you. Like, you don't even know what that shit means. You'll just be saying that shit. You don't even know what you're talking about. But if I point that out and I say that, I know what I'm saying. I'm waiting till the market comes into the box. That's what it means. Yep. So you want to see the beginning of stability rather than the ending of it. I understand what you're saying, and yes, you want to see the market gradually become stable versus what you're suggesting, which is when you come on and the market is already, it's had all these binaries being in the box already. And then now you're in trade mode because you saw that. And then in your mind, you're like, damn, I don't want to take a trade and then get caught up in a position change. That's how you're processing the fact that you already have binaries with candles in the box. So based on that, which is what I believe is what you're asking, yes, you want to see when the market gradually makes its way into stability. Sounds about right. I figure my pace is 1 month, so I have plenty of time to allow for ideal conditions to reveal themselves before entertaining a focused observation. Okay. Yeah, and just the fact that you have disciplined yourself to, what'd you say it was, 1 trade a month? Is that what you said earlier? I thought I had read that. I think that's what you said. 1 trade a month, if I'm not mistaken. Just doing that mentally releases anxiety from your observation process. So you've already released a bunch of anxiety and bullshit just by slowing down in your mind how many trades, you're ultimately willing to accept or ultimately, wanting to have for the entire month, mind you. So I think that what goes along with that is that each observation you have to personalize, meaning that you need to determine whether or not right now is a moment that you're going to, or a time, I should say, that you're going to observe. And you can do that through the simplification process that I gave you, where you just simplified, how many of these binaries are in the box? Just start off to that. And when you start off of that, that's where you'll stay. So by staying there, you'll be there in your observation, but your thought process will be different because you continue to simplify the elements of the observation when you're on looking. You're just simplifying it. Like we still observing now, right? Everything that I've already talked about, all of the candles being in the box, etc., right? All of that still applies. So now I'm looking at what we doing now. I'm looking here. I'm like, okay, ain't no candles in the, all right. We don't got nothing here. Let's see what this is. Maybe this is a position change. Now, when I was looking from here, I was saying maybe this was a position change. Now, does this? Now I'm saying, well, maybe this is the position change back up into this range up here. I don't know yet. But me not knowing doesn't matter. It's my reason for observing that's more important. Like, why am I still even looking? Well, I'm looking because you had a binary here that had 5 candles in the box right here. And this was preceded by multiple binaries that had 3 candles in the box. Then you had this movement here. You had this movement here. And now you're back here, which could be a position change from this area here, which we don't know yet. But my reason for continuing to watch is based on the simplification process that I did from the beginning. You see what I'm saying? So it's like, I'm comfortable. I'm very comfortable looking at the market now because my reason for looking has not changed. There have still been more binaries with the candles in the box than not. Still. You only had just in the last 5 binaries, you only had these 2 that haven't had any candles in the box, and these could be the springboard of position changes. So in my mind, I'm excluding these because I'm looking at, well, what is the market doing now? If it continues to do this, then that changes the narrative of the observation, and then I can start saying, all right, it's going in the opposite direction. I'll log back in tomorrow. You see? So that's kind of how I do process of elimination for an observation. I need a reason to look. And then the market, if it gives me a reason to stop looking, then I'll stop. In both instances, it's a simplification process. I'm simplifying that shit. I'm not going to make it hard at all. Overall, the market is doing this. I don't even care. I really don't care what the market is doing overall. My question is simply, how many candles are in the box? That's the foundation for everything I'm about to do. Let me look at the last 5 binaries. How many of them shits is in the box? Every time. And mind you, this is at a subconscious level. So I'm not even verbally saying it, but I'm in my mind doing it. It's just executing. That whole process is executing, and it's simple. It's just simple. How many candles is in the box, the last 5 binaries? And that's it. So now if you look, you start to see these candles are just moving, and they doing a lot now, right? I'm like, okay. At this point now, I'm like, all right, you got one more time to do this shit. You do this shit one more time, I'm out. This is me subconsciously doing this. Just like that. And just as easily as I can start to watch, I'll stop watching. And I'll just get off. And again, I don't care about overall anything. Like, I'm not thinking like, oh, yeah, this is what the market has been doing as of late. I don't care. It's not necessarily what the market has been doing as of late. So it's not for me to say that. Like, does that make sense? It's like I'm not here to judge the market at all. I don't care what it's been doing as of late, to be honest. The only thing I'm concerned with is what is it doing at a time that I choose to potentially do an observation. I start with my simplification, and then I go from there. If that shit is not within my simplification measures, I'm out. And if I feel like giving it time, I'll give it time. If I don't, I don't. But again, either way, I'm still not judging what it's doing or what I think it's doing, because that's not important. That's always going to be subjective all the time. All the time. It's going to be subjective. So, yeah. Yeah, this is good stuff, though. Like, this is good stuff that we're covering in this. My goal for one trade to pay all my bills. So setting that as my pace helps me to keep me from trying to rush backwards like I've done before. Exactly. Very good. Very good. It is effective. It really is. I remember when I shifted to one trade a week. I remember when I started that shit was crazy. It was crazy because it just was no stress. Like, literally no stress. I would start on a Sunday, do observation. Majority of the time by Tuesday or Wednesday, I had already been in my trade and been finished. Rest of the week to myself. So the one mistake I think that people have done is that they've continued to do observation and then they end up doing more than one when they, in their mind, have decided, no, I'm only going to do one. And I know that they've done that because I used to do it. But I used to do it without realizing, because I really would be losing track of time. So in my mind, I'm thinking that I didn't take a trade this week and it was this week. I'm thinking, oh, I didn't take a trade this week. That was last week, right? And then I ended with 2 trades. But literally, I forgot which project it was. There was one project where I was doing one trade a week. I forgot the name of it. Was it one trade a week? Was it called one trade a week? Forgot what it was called. Project something. I forgot, man. Whatever the shit was called. But I did a whole project literally where it would be one trade a week and then I would log off for the rest of the week. One of them projects. One of them projects. Yep. So, yeah, man, y'all make sure that y'all rewatch this. This is like a training right here, for real. I mean, that's how these market observations be anyway. That's why I was saying earlier, like, you could watch the live market observations and just learn about the way that, we're doing observation and looking at the market, like the way that we're just observing the market and understanding the behavior and the movement and stuff. Like, it's real simple. Like, I really simplified it by telling y'all about the box. How many out of the last 5 binaries got the candles in the box? Like, just start from that, and then that's going to take you where you want to end up at every time, no matter what. Yep. All right, y'all. So we did 2 hours. That was an excellent market observation for tonight, I must say. Feels great being back. And we'll see if I get the itch again anytime soon. All right, so y'all know what it is. Mark for the Team Alliance. So this is Live Market Observation, volume number 112 in the bag. All right, so I'm going to wrap it up. I will see you guys on the next one. Everybody in training, I'll see you in the group chat. You'll know what it is. Mark for the Team Alliance. I'm out. Deuces.
Dom the Monko, Dom the Monko.